This class is best suited for those with at least an intermediate level of technical analysis and experience with Fibonacci-based price analysis methods, such as retracements, extensions, and projections. 4 methods will be examined with a series of detailed chart examples showing steps and results before, during, and after the application of time analysis. They will explain how to use the methods and make adjustments under a variety of market conditions. This class was produced in 2021, and most examples are of American stocks. However, time analysis can be applied to other markets outside the American stock market and periods before or after 2021. That is why there will be examples of stocks from other regions and charts of currencies and commodities. Time analysis should not be mistaken as a flawless approach. It is not always suitable or possible to analyze time to reliably determine when significant events can take place. Analyzing time isn't always straightforward, but it is not completely useless. It has its place in certain situations. Trend lines and channels can be considered a form of time analysis since they incorporate time from the x-axis of the chart in addition to price from the y-axis of the chart. Significant reversals, breakouts, or flat ranges often take place near where and when trend lines and channels intersect with horizontal price levels, as well as other trend lines and channels. Any angular structures based and derived from trend lines, such as resistance fans, also incorporate price and time analysis, since diagonal lines are plotted on the x-axis of time and y-axis of price. The same can be said for structures with curvatures, such as Fibonacci circles, because they also incorporate price and time elements. Even a more obscure tool, such as the Fibonacci spiral, can be considered a form of time and price analysis. Time analysis in this class will be similar to the aforementioned methods, except it is strictly for identifying the approximate times certain events can take place, without always directly using the y-axis of price. Time analysis, similar to methods based on trend lines and curvature structures, is a secondary or even tertiary tool to complement primary technical analysis of price. It is an approximate guide to gauge the time frame of price action developments. So-called timing of the market is not possible. Time analysis realistically provides a rough guide and should not be a primary tool to completely rely on.